thing to talk about, which is something that Pete Grandich has not spent decades talking about. And the silver bugs used to get mad because I always felt it was like kissing your sister compared to owning gold, is that silver now has demonstrated it's now first breaking out, and would not surprise me that while they both go up over time, that silver from here to say the end of the year actually has more of a percentage gain than gold. I think one of the big stories that's come out in that, besides the tremendous short position, and there is that we're learning more and more two key things for silver. One, the surprising industrial use militarily wise. That's not something that's been discussed till recently, until we start to realize how much silver is being used in military weapons and things. But then also that China has now been going around the world buying silver directly from miners. And these all just bode well.
Gold and silver showed no sign of slowing their rise on Monday, as investors continue to pour into precious metals. The white metal trades historically cheap to gold, with the current ratio of 2.7 only expected to decline to 2.61 based on the above price assumptions. Silver has historically outperformed gold in a gold bull market, particularly in the later stages. For instance, gold gained around 40% during the pandemic, while silver was up a whopping 141%. Seasoned investor and trader Peter Grandich emphasizes the ongoing strength of precious metals, predicting further upside despite possible short-term corrections. Additionally, he believes silver may outperform gold in the near term, driven by industrial and military demand, alongside China's direct purchases. In August, Reuters reported that China imposed quotas on gold imports for various Chinese banks. A report from Citi suggests that retail investment may be shifting towards silver, as evidenced by the country's silver-bullion imports, a reliable indicator of retail demand, rising from negligible levels to over $100 million earlier this year. Citi suggests that if China purchased silver at merely 10% of its current gold acquisition rate, the resultant demand could represent approximately 20% of the total mined silver supply. While Western markets are just now seeing a rise in gold-related investments, the BRICS nations have been quietly stockpiling gold for years. The strategic foresight of countries like China, Russia, and India has positioned them far ahead in the global race for gold. Regarding the overlooked economic and geopolitical shifts, Peter Grandich warns that escalating global tensions and U.S. government spending create a perfect storm. He believes this supports the rising value of precious metals. From a technical perspective, Grandich highlights his confidence in holding gold over equities, predicting a potential 30 to 50% correction in the stock market. The two precious metals have outperformed the broader markets, with bullion rising 26% year-to-date and silver gaining 35% during the same period, compared to the S&P 500's gain of 19% since the start of 2024. Now we present the clips of Peter Grandich's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It's probably been predicted of what it's now about to do a million times in the last 10 years. Okay, from some, good people, some people that are always saying it's going to the moon, but good people. But the argument now for it has never been better. The fundamental argument, and it ties into just what is happening on the world stage in terms of people's concerns about paper assets. I think that's the thing that's not being spoken about. I still find the financial service industry as a whole completely out of it to try to even begin to understand what is happening regarding the BRICS, the change coming in monetary systems, the introductions of new trading partners that will not be looking to use the dollar or even some of the Western world systems. These are all things that are partly assisting the metals movement, but Wall Street has no misunderstanding. I keep going back to, it wasn't that long ago when I was speaking to some young financial advisors. I don't think any of them were over 40 and many of them were under 30. And when they said he's going to talk about the BRICS, I heard one say to the other, he's going to talk about the housing industry. That's how it's not everybody like that, but there really is a neglect. And what I don't believe people can't get away with is what's happening in the world now impacts us. We're not a generation or two generations ago where the United States could be separate from the world and not be insulated from anything else that happens around there. And we have huge problems. We just saw our government spend another $500 billion to our deficit in just 3 weeks. It's all, I hate to say it, but all the doom and gloom that people say, oh, I heard that for years. And now the perfect storm has basically come together for it and all. And that also is the underlining support to the metals. I tell you this much, I feel much happier owning gold here and not worrying about a 30 or 50% correction. I think that's completely off the table, but there can be a 30 to 50% fall in the stock market. And so I'm quite happier that I chose gold as a capital appreciation and in my portfolio than the general equity market right now. I think in the very short term, I think a lot of the movement was based on what was transpiring with the BRICS. Now we go into those meetings next week. We've already seen a lot of news come out. It's all bullish for those of us who've been big believers in the BRICS. I've been one of them. I think I'd be hard to believe there was somebody much more of a believer than I. And there tends to be sometime buy the rumor, sell the news. So there's always that possibility. And what I would just tell people, and nobody knows the future but Almighty God, is we know we'll be in a bull market if it's a sharp sell-off. And everybody goes, how's that? Bull markets always have sharp sell-off corrections. It's when things just trickle and goes down and goes back a little. You think it's turning, it goes down again. That's a bear market. And that the goal isn't anything near that. So it wouldn't surprise me. It wouldn't change my long-term thoughts. But it's hard to talk about resistance because we're at levels we've never been before. The only resistance I think somebody would talk about is a psychological number, which would be 3,000. The thing to talk about, which is something that Pete Grandich has not spent decades talking about, and the silver bugs used to get mad because I always felt it was like kissing your sister compared to owning gold, is that silver now has demonstrated it's now first breaking out, and would not surprise me that while they both go up over time, that silver from here to, say, the end of the year actually has more of a percentage gain than gold. I think one of the big stories that's come out in that, besides the tremendous short position, and there is that we're learning more and more two key things for silver. One, the surprising industrial use militarily wise. That's not something that's been discussed till recently, until we started to realize how much silver is being used in military weapons and things. But then also that China has now been going around the world buying silver directly from miners. And these all just bode well. So other than healthy, normal consolidation and correction, both of them's least resistance is higher, not lower.
With massive knowledge of the market, Peter Grandich states recent BRICS announcements suggest a shift in how their currencies may be used, possibly through a rating system. With rising debt and interest rates, he expresses concern that the U.S. is losing its global trade influence, which could weaken the dollar. As the chair of BRICS for 2024, Russia proposed the creation of a BRICS Cross-Border Payment Initiative, BCBPI, in which members of the organization will use their national currencies to trade. The Global South-Oriented Organization BRICS has released plans to transform the international monetary and financial system and challenge the dominance of the U.S. dollar. Highlighting the financial strain on Americans, Grandich explains that rising inflation drives more reliance on credit cards for essentials, pushing many toward precious metals. He argues that while Bitcoin hasn't gained significant traction, central banks continue prioritizing gold due to its long-standing credibility. Let's get back to the interview.
Well, I don't think anyone knows for certain yet. They've put out stuff the last 72 hours that gives some inkling. The best educated guess is that their currencies will be used. There'll be some sort of rating system, how much one currency partakes in that basket versus others. But what you can never lose sight of is the dollar and the United States is outside looking in. And I always say to these younger financial advisors, and I say, okay, hold on a second. Maybe it's not as big as we say it is. It's only going to be half as big. But that half used to deal with the United States, was trading with the United States, was using the US dollar, and now won't. Tell me how that benefits the United States. And they do the old Jackie Gleason honeymooners, because they can't answer it, because it is a very serious factor. Listen, Elijah, if we took a poll right now, if we went to any section of the United States, in any level of income, wherever they are, what they may do, and explain to people, we are heading towards $36 trillion in debt, where Congressional Budget Office says we're going to get to $54 trillion in less than 8 years now. But let's just say we get to $50 trillion and put a 5% interest only on that. That's all the interest rates go to. You have to refinance it. That's $2.5 trillion in interest expense. We've only taken in $5 trillion in our best year. So even if that gets boosted up somehow in revenue, even though we got a president forgiving more student loans, which are the single biggest assets on the Americans' books. And I say to people, how do you expect the government to run when half the money is going to go to interest expenses? No way you can get the same services you are accustomed to now. And by the way, and it was in a report I wrote, infrastructure is far worse. Natural disasters are far worse. Everything is costing more. It's not going up 2.3%, the number. We all know that. Anybody's got insurance. Look at our home insurance, our car insurance, everything that's going up. We now have the bottom half of people working in America, almost half of them now. It was just 25% a couple of years ago. Almost half of them now are using credit cards to pay for day-to-day needs. So this is no longer, it's way yonder. We don't have to worry about it. Most of the people listening to this, God willing, will be living when this crisis becomes acute. And that's why I think is also helping the metals, because people recognize that, and the detriment is going to be to paper currencies. Now, the Bitcoin people will tell you, somehow Bitcoin is a better thing. But if you think about it, when they started saying that as earnest 2-3 years ago, it's really gone nowhere as fast. It's only gone back to where it's been. And look what gold has done. And by the way, I don't see any central banks or any sovereign wealth funds announcing that they're buying huge quantities of Bitcoin, but they are buying gold. And that's where the 2,000 plus years, the credibility, the recognition, the understanding, and the people with the real power, that's what they're buying. And I still find most Americans have little or no ownership of gold to this day. We just had 3 or 4 families in the last week that came into our planning group, all with above average income, all loaded to the gills with stocks and bonds, and not any exposure to metals. So anybody that thinks, the metals have topped out, everybody's run into it, hasn't even started. In fact, today I was shocked. CNBC, Out TV, and one of the biggest talking heads on TV mentioned gold. They didn't go into a whole story like me and you were discussing now, but they mentioned it. At the time they're actually talking about it is going to be a lot higher. But gold and silver, other than correction phases, still have a long way to go. This bull market hasn't even become matured yet.
Silver's performance in 2024 is likely to be heavily affected by geopolitical tensions, such as the U.S. presidential election and monetary policy decisions by the Federal Reserve. As global demand for gold and silver intensifies, do you believe we are only at the beginning of a larger shift toward precious metals, or have we already seen the peak of this bull market? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.